ในเรื่องของผลการดำเนินงานแล้วก็ตัวเลขทางการเงินและในช่วงท้ายก็จะเป็นคำถามคำตอบนะคะงั้นขอเชิญคุณคาริดค่ะ
Good morning, everybody. As usual, we will break up the presentation into two parts. In the first part, we will discuss the industry fundamentals, and in the second part, we will discuss the financials of the company. So as you can see, pressure shipping is part of the dry cargo tramp freight market, and we specialize in the small handy-size sector of the market, and we also have a few ships now in the Supramax sector. So basically, we don't carry any containers, and we don't carry any liquid cargoes. This is a snapshot view of the company as of the 1st of January 2012. At that moment in time, we owned 25 ships. The average age was 14.2 years. The market value was about $330 million, and the book value was approximately $300 million. So there's a hidden reserve of about 10% in terms of asset values, which is not shown on the balance sheet. The total deadweight is about 704,000 deadweight tons, and the average size per ship is 28,170, which makes us almost identical to the average size of ships in the Baltic Handy Size Index. Now, at the bottom of this slide, I've given you some market value movements on how these ships have been valued at different times in their lives. And you can see that the value of these ships fluctuates quite significantly depending on how the freight market is moving. For example, in 2007 and 8, values of ships were highly inflated, and it was the wrong time to be buying ships, but a good time to be selling ships. And if you look at 2011 as an example, it's a great time to be buying ships, and of course, not a great time to be selling ships. If you look at the next slide, it shows you how the BDI has been moving over a very long period of time. In the box, I've summarized for you the main movements in the index and the most crucial dates where the index had made either significant movements on the upside or significant movements on the downside. If you look at the averages that have been achieved over the years, it gives you a much better feel for the way the cycle has been running. If you look at 2012, you can see quite clearly that this is turning out to be one of the lowest years in the last decade or so for freight rates. And I expect that this low market will continue definitely for this year and maybe part of, if not the whole of next year. This is a picture which sort of gives you an overview of the demand side of the equation. And if you look at this picture, you can see quite clearly that between iron ore, coal, which includes both thermal and coking coal, and grains, you have more or less 80% or 70% of the market covered in that. And then the other bulks, or minor bulks as they are known, are the balance 30%. If you look at the seasonal chart of the BDI, we've tried to show you how the BDI has been running over the last 25 years. And we've put down for you the three most recent years, that is 2010 in red, 2011 in a sort of a yellow, and 2012 in the form of a dark black blue line. So you can see, as compared to the last 3 years, that 2010 was a good year compared to 11, and 11 appears to be a very good year compared to what's happening in 12. Now, dividing this BDI into two time frames, that is 1985 to 1999 and then 2000 to 2011, you can see clearly how the industrial production might of China makes their annual Chinese New Year holiday have a significant impact on the dry bulk markets. So whenever the Chinese New Year comes up, you will see that the freight market drops quite sharply, and soon after the Chinese New Year is over, you can also see that there is an equally quick recovery. If you look at the months of July, August, September and October, whether it was during the pre-Chinese boom years, that is 1985 to 1999, or in the post-Chinese boom year, that is in the years 2000 to 2011, the numbers of the BDI are weakest during the months of July, August, September and October, and this is because grain movements slow down or almost disappear during this part of the year. It's also a time when the Western world slows down their industrial production because they all go on holiday between the months of July and August. Coming to the supply side. If you look at the supply side, then this is the picture that appears as of the 1st of January 2012. We have almost 10,000 ships in the dry bulk sector. The average age has come down to just 12 years. The total deadweight tons is 622 million deadweight tons, and the average size per ship is 63,000 tons. Now, what I've done for you on the bottom of the slide is try to give you what's happened in 2010 and 11 and what is possibly going to happen in 2012 and 13. So if you look at 2010 as an example, we are showing you that the year ended, that's the ending date for 2010, the year ended with 554 million deadweight tons of ships, and it had a growth factor of almost 16%. And how did that growth come about? It came about that there was 129 million deadweight tons of ships which were on order during that year. Of that, almost 50 million deadweight tons was never delivered during that year, and scrapping was a measly 3.5 million deadweight tons, resulting in a net increase during 2010 of almost 76 million deadweight tons. So that's a huge increase. If you come to 2011, you can see that the ending date 2011, the deadweight tons in the world fleet went up to 622 million deadweight tons, or a 12.25% increase. And that increase resulted from the 140 million deadweight tons of ships which were on order, the 39 million deadweight tons of ships which went into slippage, and the extraordinarily high 33.3 million deadweight tons of scrapping that took place, and resulted in a net increase during 2011 of 68 million deadweight tons. Now, if we look at 2012 and 2013 and make two assumptions, we assume first of all that slippage will be 30% in each of these 2 years, and we further assume that scrapping will take away 35 million deadweight tons in each of these 2 years. Then you will see that 2012 will have a growth rate of almost 10.25% and go from 622 million deadweight tons at the start of the year to end the year at about 686 million deadweight tons. And similarly, 2013 will start at 686 million deadweight tons and end at 716 million deadweight tons. So if we look at the last row, you can see that the growth of ships, net growth of ships, has been declining since 2010 on an annual basis. So in 2010 there were 76 million deadweight tons of ships which were added net. In 2011 that dropped to 68 million deadweight tons. In 2012 it's expected to drop to 64 million deadweight tons, and in 2013 it will drop down to 30 million deadweight tons. Now this is basis 30% slippage. If we find that slippage were to increase to about